Government bonds are not performing well. So capital is starting to flow towards precious metals.
Hello and welcome. Thanks for tuning in today. Silver has started off 2025 with a bang. Silver is up over $20 per ounce in just the last few weeks and has recently passed $95 per ounce. And by the time you're watching this, silver might have already surpassed $100 per ounce. Today I'm joined by Oren Elbaz, also known as the Silver Hermit, to consider what triple digit silver might mean for industry, governments, and investors. Oren, welcome back, my friend. How's it going today?
Good evening. How do you do?
Doing great. I would like to start out by looking at our relationship with China, and then we will dive into multiple reasons why silver is in a historic bull run right now. Previously, China was more or less aligned with the US economically, but we are entering a competitive era with them, and they have been selling our bonds recently. It has been reported that the amount of US Treasury bonds they hold has reached its lowest level in 17 years. Now, it's estimated that China refines 60 to 70% of the world's silver, but the US has recently announced that we are going to build a $7.4 billion metal refinery in Tennessee. This will help to reduce our dependence on China for critical metals, and the US has added silver to its critical minerals list. It's also worth noting that Maduro had met with Chinese diplomats just hours before he was captured by the US military. Oren, what factors would you say have contributed to silver entering this bull cycle?
Yes. Well, I was about to start with other factors which are affecting the price of gold and silver, but since you mentioned China, then this is also on my list. The fact that governments right now are starting to fight over control of critical minerals. And this is perhaps they're looking down the road and thinking about the possibility of a global conflict of World War III, where they will need those minerals by hook or by crook, and regardless of their price, by the way, because if you need it for defense purposes, then the price doesn't really matter anymore. And I was actually thinking of naming this year, 2026, the year of the governments when it comes to silver, because it's though the fight over the price of silver is taken out of the hands of banks and moves to the hands of government, and it becomes, what happens to stackers is just becoming secondary, or what happens to the dollar, even what happens to the dollar becomes secondary to the ability to acquire silver for your national security. Now, there are other factors, of course, that we need to mention. There's money printing and inflation. It's always in the background. It's pushing the prices of commodities higher. Of course, gold and silver are part of the commodity complex, so they're getting dragged along with inflation. Of course, there's increased industrial demand also. We've seen in recent years the number of industrial applications for silver only growing
Right.
every year. Simultaneously, we're suffering from a lack of investment in the mining sector. Now, perhaps the price is rising. Perhaps we're going to have some investment in this sector after years but it takes years and years for that investment to translate into a higher supply. And of course, we have falling ore grades, so that's another factor. And of course, we've had that suppression, price suppression that
Hmm.
came from the banks all these years. They now have to unwind those short positions. They now have to exit those short positions which they used in order to control the price. They can no longer keep the price down, because then they'll find themselves fighting against their own government. So they can't do that. So they have to let the price run in order to encourage more supply coming to the market. And
Right?
last and not least, of course, there's all this geopolitical turmoil. Now, of course, as we all know, there's an ongoing conflict in Ukraine, there's an ongoing conflict here in the Middle East, and now we also have those protests in Iran. That's a very sad story. The fact that the Iranian regime, this very brutal regime, doesn't allow its own citizens basic liberties that we enjoy here in the West. Iranian people do not enjoy them, and when they demand those liberties, then they get beaten and they get shot in the streets by people
Yes.
from the regime trying to suppress those protests. And that's a very sad story. We are hearing numbers of casualties there, by the thousands or perhaps even tens of thousands. It's extremely brutal and very sad.
It's
And
awful.
you know, all this is adding more fuel to the fire. People are less and less feel less and less secure, and they have this need for safe haven assets. And gold and silver are now performing well, whereas government bonds are not performing well. So capital is starting to flow towards precious metals, and as a matter of fact, in recent days, we have seen a sea change because, yesterday, the stock market was down. And usually when the stock market is down, gold and silver go are dragged down with it. Usually. This is what we've seen even in the last couple of years as gold and silver were rallying. Every down day in the stock market was also negative for gold and silver. And yesterday it wasn't the case. So I think yesterday was really something new in which you saw a shift, a rotation, I think from tech stocks to mining stocks, I think for the first time in the past 2 years. And I only expect that to accelerate in the coming months.
That's interesting. So that correlation has broken between gold and silver and the stock markets. And in regards to industrial demand, well, in 2024, the industrial demand was 680.5 million ounces, and the total mine supply that year was about 812 million ounces. So industry is really gobbling up a lot of silver. And in regards to the ore grades, since 2007, the average grade has gone from about 500 grams per ton down to about 300 grams per ton. So the ore grades are falling as well. Or what effect will the rising price of silver have on industries that use silver for their products?
Yes. So the economic logic says that when the price of an input such as silver rises, then the high-end applications, um, they're going to continue because they have the ability to pass on the added cost to their consumers. Yeah, for instance, your smartphone uses a tiny amount of silver, and they're not going to stop making smartphones. They're just going to, the price is going to be, I don't know, $10 more, $50 more, it depends on the price of silver. And you're just going to pay for it. I don't expect there to be less smartphones being produced. But when it comes to other applications, price sensitive applications such as solar panels, for instance, there I do expect those applications to be priced out. We've seen an article earlier this month about a Chinese company, a big Chinese company called Longi Green Energy Technology, which announced that it will be phasing out or significantly reducing the use of silver in their solar cells and replacing it with copper. And you and I had this discussion a few
Yes.
months back where we predicted that. We said that it's inevitable because the photovoltaic energy industry is price sensitive, and we expect such industries to phase out silver. So I do expect industrial demand to decline. This is what you would expect when the price is rising so dramatically. But on the other side, I expect investment demand to increase and more than replace any decline in industrial demand. You need not worry. There's plenty of demand for silver, even if industry is consuming less of it.
Right, that makes sense. And if you guys would like to check out that video, I'll leave a link to it in the description along with Oren's links. I do wonder if the development of that new silver EV battery from Samsung might pick up a lot of the slack. They estimate these solid state silver EV batteries would use about a kilogram of silver. Now, the interesting thing is if just 20% of the global EV production adopts these batteries, well, that would mean that they would gobble up about 500 million ounces per year. And, once again, the mine supply is typically just over 800 million ounces. So it'll be interesting. I mean, we'll have to see how widespread these batteries are used. But that could be pretty significant in the industrial demand for silver.
Yeah, exactly.
They're saying that the range will go up to about 600 miles before it'll need to charge, and they're saying that it'll have a 9-minute charge time. So it'll be interesting to see once they're out there in the public and people are reporting on what they're experiencing, if they actually hit these numbers. Oren, what could the rising cost of silver imply for investors?
Yes. So as we said, we do expect investment demand to increase substantially. Like it's been there all those years, we stackers, we've been there, we've been buying our silver, but the vast majority of people, the wider public, they haven't really joined in. But thus far, what I'm seeing, for instance, from Wall Street is
Uh-huh.
disbelief, right? We have this story about there's this bank called TD Securities, and there's this analyst there called Daniel Galley. He became famous in our community in the past year because he was bullish on silver, and he said some nice things about silver. But he himself, he tried to short silver recently when it reached $78 an ounce, and then. Uh, a week or two later, he got stopped out when it reached $93 an ounce, and they had to close that position with a $600,000 loss, which is, it's small in the grand scheme of things, but it kind of shows you that Wall Street is still not really interested or has no conviction in silver. They see it as a trade, something to buy into and then sell. They don't see it as money, and they don't see it as a revolution, a monetary revolution in the making, the way we see it. And
Right.
because they don't have that conviction, they're trying to short it. They think of it as a bubble. They don't understand the magnitude of the move at hand.
Well, that definitely stung. So I'm sure that Daniel will remember that one.
I think it's more humiliating than the loss of funds is smaller than the humiliation.
And the damage to his reputation. So what would you say increased silver costs will mean for governments moving forward?
Yes. So as we know, governments are not as price sensitive as we are.
Right.
You know, if the Fed wanted to buy silver, it could just print dollars the way it prints dollars to bail out banks, and it does that all the time, even
Yep.
even secretly, they don't advertise it. Well, they could print a bunch of billions and buy some silver and not let us know until after the fact. If governments really start getting interested in silver seriously, as for instance the Russian central bank has started to accumulate silver, then things could really go get wild. And then I would not be surprised to see governments starting to, for instance, nationalize mines
Hmm.
and taking over them, if not really trying to run them, then at least buying their, their shares and announcing that they will receive all their production. And this is one of the risks that we as investors in the mining industry have to take, that it is possible that at some point or other, mines are going to get nationalized. Now, but I think the even greater story here is the fact that as we warned all those years, the rising price of silver to triple digits and beyond could collapse, eventually lead to the collapse of national currencies, lead to the collapse of the dollar or even other currencies. For instance, right now we're seeing the surging yields of government bonds. For instance, in Japan. Again, we've had this interesting discussion not a long time ago about rising bond yields in Japan and the fact that it threatens the bankruptcy of the government itself. And the only alternative to the collapse of the bond market is for the central bank to print more money to bail out the bond market, but then it only means that the currency suffers, the currency collapses instead of the bond market. So it's practically it's just as disastrous for an economy to have its currency collapse as it is for the government to default on its debt. And and I advise people to have a look at Japan all the time because it seems that the crisis in Japan is accelerating. So what gold and silver, the rapid rise in the price of gold and silver could eventually lead to the collapse of currencies, and it's becoming a more realistic. It used to be, you know, a conspiracy theory. Now it is becoming a very real possibility.
They'll print money and they'll also print bonds. And so that has worked pretty well for them in the past, but that whole um, game might, suddenly come to an end, and that could be pretty hard on everybody.
Yes.
And who knows with the changes that are taking place with silver being considered a critical mineral, maybe the government will incentivize mining companies, to expand their silver production to try and help move it along a little bit. And of course, there is a concern that mines could get nationalized. So that's just something to keep in mind. Another thing that might affect gold and silver coming up this year is if they start cutting rates. People are expecting them to do 3 or 4 rate cuts. Typically, that's bullish for the metals. So when they do start dropping rates this year, it could make the bull market even stronger for gold and silver.
Yes, I think there was this expectation that cutting rates it's also going to be beneficial to the bond market, as though long-term interest rates are going to fall together with short-term interest rates. Effectively, this is not what we're seeing. They're cutting interest rates, of course, for short-term interest rates, but long-term interest rates remained high, even rising. So, the bond yield is steepening. That's not a good thing for the holders of long-term bonds. It means that their market price is falling and their yields are still not high enough to justify this risk. So right now, moving to gold and silver seems to be what people prefer to do instead of remaining invested in government bonds. They move some of that money to gold and silver. So trying to cut rates could, as though, only pour more fuel on that fire.
Oren released an article yesterday on his Substack that I do recommend checking out. I'll leave a link to it in the description. It is The Path to $130. And if you could walk us through your reasoning behind seeing silver move to $130 an ounce.
Yes, I was beginning to ask myself if I'm not bullish enough on silver because
Right.
because there are, these are, you have sometimes converging technical signals telling you that something interesting is going to happen. And well, it starts with the price of gold itself. I was, noticing that it broke out of a cup and handle formation. And when we do break out from such a formation, you do expect a rapid rise in the price, and it really started happening yesterday. So we had this retest of the neckline, and it started racing. I was assuming that it's going to reach $5,000 in short order. Now, the fact is that as we're speaking, the price of gold is already above 4,800. So we could get there even faster than I imagined. So perhaps I'm going to try need to update those numbers, but let's take that as like our starting point, the idea that gold is going to reach $5,000 an ounce. Now, if you
Okay.
have a look at the gold to silver ratio, you'll see something very interesting there because there are two famous and important bottoms on that long-term chart. One, of course, is 1980, and the other is 2011. And if you connect on the gold to silver ratio, if you connect those two lows, you get a trend line or the beginning of a trend line. And I think that if we reach that trend line again, right now it's at around 38, that's going to yield some kind of a correction, some kind of at least a significant correction in the price of gold and silver. And the way the gold to silver ratio has been absolutely falling in recent months,
Hmm.
yeah, so I was thinking that it's not going to stop until we reach 38. Yeah, on that ratio, until we reach that trend line. So that's like the most plausible place you could expect to see a correction. So if you take $5,000 gold and 38 on the gold to silver ratio, then you get $130 silver. So that was the first point. And then I was starting to look at mining companies because, as you recall, we did a few months back. We did say that for whoever has enough gold and silver, enough physical gold and silver on his stack and wants to take a little bit more risk, can do that through mining company ETFs such as GDX, GDXJ, and SILJ. Specifically, this ETF, SILJ, I look at it as a precursor for junior or mid-tier silver miners. It was about to break out, or it was breaking out at the time, and we expected it to go to 34. And now we're looking at even higher targets. And if we look at it on a logarithmic scale, then it indicates as though this ETF can go to $87 a share. Now, that's a substantial increase compared to its current price. Now, I'm having a look at another important chart, which is the ratio between this ETF and the price of silver itself, because we expect those miners to outperform silver. We expect them to perform better than silver. And when we look at that ratio, it wasn't the case in recent months. Although the prices of those shares were rising, they weren't outperforming silver. And right now we are seeing the prices that ratio, that SILJ to silver ratio is almost at its absolute bottoms. Like you can see the bottom from 2016 and the bottom from 2020 and even the bottom from the beginning of this rally in 2020, late 2023. It's about at the same ratio. So it has the ability as though to rise and reach higher levels. And that means the outperformance of silver miners compared to silver. The all-time high of that ratio is about 1. That means that SILJ ETF equals the price of silver. I want to remind you,
Interesting.
yeah, yesterday it closed at I think 30, 35 or 36, something like that. The price of silver is at 95. So it as though implies that silver miners, those mid-tier silver miners, can triple in price without the price of silver even rising. Now,
That's
if the price of
interesting.
silver, yeah, and if the price of silver rises on top of that,
Right. Yeah, it could be
then
really
you get
explosive. So it's about 35 right now. And
it,
if we see silver get up to 130, that could be a pretty good play.
for silver to rise to 130, that's about a 40% increase from current prices, right?
Yes.
So so take that 40% increase, multiply that by three, and you get, very substantial increase. And now I don't expect us to get back to the top of that ratio overnight. There could be some resistance in the middle. I see that there is this ratio that was the top prior to 2016, in 2013, 2014. Again, in 2020, it's around zero point 0.7. So we
Okay.
could find some resistance there. I was kind of betting. I know it's a long shot. It's a long shot, but you have to work on what you have. And right now, it seems as though, at least on the first phase of this rally, we could reach that ratio, which implied that together with gold going to 5,000 and silver going to $130 an ounce, perhaps those mining shares could triple in value, about triple. I want to make it clear to everyone. I'm not suggesting that you need to keep your physical position. But if you have some spare cash beyond that physical position in gold and silver, then you can put some money into mining shares. It is high risk, I admit, but if you have some spare cash and you have the appetite for risk, then you can, for instance, buy the SILJ ETF. Yesterday, it jumped substantially higher yesterday, and I think it's about to take off seriously in the coming months. If you do invest in mining companies, you have to, it's not like buy it and forget it. You have to follow those prices, and you have to be mindful that if there is a correction in gold and silver, then those mining shares are going to correct even more sharply. Then please, like, follow me. I will be following the prices of gold and silver and the shares as well. So if there's a time that, for instance, I believe that there's an imminent correction, then I believe that I'll at least try to alert people so that they can perhaps realize some of their gains. Just not to endure too much sharp of a correction, in at least in the mining shares.
Sure, take some profits off the table if you see something a big downturn coming, that absolutely makes sense. And that's the way to play this market without having to lose any of your physical silver in the process by selling it.
Yes, exactly. I don't want people to sell their physical silver, but mining shares is certainly something that you can sell if you feel that they're becoming overvalued.
Definitely something great for everyone to consider. Uh, to everyone who watched today, thank you so much for being here. I do appreciate it. Hit that like button and subscribe to the channel for more content like this, and we will catch you in the next video.